Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Oh my gosh, guys, I forgot to turn the camera on. This is not my week. All right, wait. I'm all sorts of messed up here. Hold on. First thing here is let's get some music up in here. That's not bad. All right. Let's fix the camera. I am live, right? Well, I don't actually remember like telling this stream to go live, but like, okay. All right, guys. We have retail sales today, don't we? Yes, we do. U.S. retail sales month over month. We're looking for a reading of spot 4 versus a previous reading of spot 4. That's in about 45 seconds here. The treasury market already seeing some large transactions and doing all sorts of crazy things. I mean, not too crazy, but no, I said we're live and none of you guys said anything. Marco. Once again, we'll deal with it after the news here. 10 seconds. Okay, that's bad. That's a spot 6 versus spot 4, and the treasuries do sell. Are we there yet? No. It's 111.08. 111.08. Jiwi's like, what? Okay, maybe we are live. Let me show you the charts. We have this key area right here at 111.08, wherein you might start to see some momentum start to come in short. We're awfully close, I must say, but we're not quite there yet. Let's just come back and look at where we're at, okay? Yesterday, pretty decent move down after the Fed's Waller had a speech and the market interpreted it as hawkish. So I don't know why all of a sudden they cared so much about that particular speech compared to all of the other ones. But that was the, because we've been saying now for like 4 weeks that the interest rate pricing is too rosy, right? And we're like, oh, the Federal Reserve is going to come in and smack this down. And then they did, and the market just ignored it. And I'm like, what? Now they care. Okay, whatever. S&P 500 here also struggling after Waller. The damage wasn't too bad in equities, but now overnight we're a little bit lower. Oil, well, it's at the lower end of the range, so it doesn't look too good from the perspective of oil. Gold and silver also, that's more hawkish, right? Kappa still struggling. The dollar going up. So what I'm seeing is kind of like what we had when we got inflation, right? That concerns about higher interest rates and more inflation causes everything to sell. And havens that people would think would be havens, like gold and silver, don't behave as such. That's what seems to be going on. I wouldn't call it a speech. It was a Zoom call interview with the Brookings Institute. Okay, well, that might explain a little bit of why it was it had a little bit more impact, because if it's like a speech to some industry conference or something like that, and he makes comments about the economy and Federal Reserve policy, like that's one thing. When they have like an interview, like that's an event that's basically specifically there for that speaker to say something about the market, right? And so those ones tend to be a little bit more impactful. I'm still kind of at like, why did they ignore all of the other job owning that the Federal Reserve has been doing for weeks now? And then this is the one that like breaks the straw that breaks the camel's back, you know? Like, okay. Okay, they made a slightly lower low there, and then backed off again back to what appears to be the hole at 14.5. So at least on that one, they're not going to make it to 08. If they do what they did yesterday, where like, you know, they make another new low after that, then it's going to be pretty. Oh, you know what? I didn't talk about Bitcoin. Not doing anything, you know, just for prosperity's sake. Okay, now with all that out of the way, I have a confession to make. An embarrassing confession to make. As you probably suspected if you were with us when the stream ended, I was not paying attention. I had 2 contracts on when that meeting started, and I ate the whole thing. I ate 50 ticks on 2 contracts and lost $100. So yeah. The thing that makes me the most mad about it is that like it happened right when we closed the stream. So you don't even get the entertainment of watching me take a bad loss like that. I'm just... I think, yeah, I was wondering if that's what happened. I don't want to be like these other YouTube channels where like something significant happens off stream and they don't say anything, or they're like, you know, I took a bad loss today, but then after the stream I came and I made it back. Well, then why did you stop streaming if you were still trading all day and you don't have a day job? That one makes no sense to me, right? You know, you have to do it for the views at the very least, right? Yeah, the fat tail of trading with no stops. So I thought a lot about that yesterday, and I was like, okay, so should I have had a protective stop on there? And part of the reason why in the micros I haven't really been trading with a hard stop per se is because of my concerns about the liquidity and everything like that. I'm too afraid of it being triggered when it doesn't need to be. I think that the number of times where it would get triggered when it didn't need to be is enough to justify not doing it. But, you know, that's a guess. That's like a big guess. And so then we finally had I mean, it was inevitable that it was going to happen, right? And I lost 50 ticks. I shouldn't have had 2 contracts on. That was kind of the bigger problem. But, so then I'm like, okay, so if I had had a stop, would that have helped me? And I'm not sure it would have. Honestly. I'm not sure that it would have changed anything. Because, like, it just, like, slipped through. So, like, the first thing is that 50 ticks was where I was thinking about I should have, like, an absolute protective stop. Well, clearly that's not where I should have an absolute protective stop. 50 ticks is too much. I don't know. But then the other thing is that, you know, with the liquidity and everything else like that, even if I had had a closer stop, would I have still gotten 50? There's a chance of that as well. Trading off, I can give my trades more room to run, but also I wasn't paying it. Yeah. Well, I wasn't paying attention in that, like, I shouldn't have been holding the contract going into an event that I knew was going to happen. So that was definitely an unforced error. But I don't know. It with the liquidity and the things that I was planning on doing, if I had put on a stop and everything, it still would have been the full loss, right? So I don't, I think it'd have to be an instance where like I lost more than 50 ticks for me to say, okay, now I really do need to put it on there, right? But I don't know. I think that's like an unforced error at the end of a long string of just awful trading. So I was kind of looking at it. I added this little chart. I want to pull it over here so that I can, close it after this. But so I went in and I said, well, does it have something to do with the spread or something like that? And something that I noticed is that it seems like it was around October, maybe the end of September, that I started to struggle. And you can see the ATR of the 10-year rising there. I think that what's happening is this was when the yield curve kind of started steepening. You can see that right here. See where the yield curve kind of started steepening. And when the yield curve started steepening, that means buy the 2 and the 5 and sell the 10 and the 30. And so I think what that's meaning is that if I want to buy, I don't get as much out of it, essentially. If I sell and it's still steepening, then it's better. But I haven't had as many of those. And when I looked at my stats, you want to see my stats? It's so awful, man. It's really always jarring where you've been trading like great for I'd say over a year, and then all of a sudden for like 3 to 4 months it's just like every trade is awful. It's so it's very discouraging, let's say. Okay, apply, and then I gotta get it so that we're only looking at the live trades. Otherwise, the performance would probably look pretty good. There you go. So you can see it's bad, right? It was like I was kind of struggling, but it wasn't struggling too much, right? And then I took this one at the beginning of the year, and then I took this one at the beginning of the year. So I've had 2 bad losers in a row, and I've lost $400. It's bad, right? It's really bad. And when I come in and I look at the stats, you look at this MAE. So the MAE is actually better than I thought it would be. Because I've had some of these trades go like 50 ticks, or not 50, but like 20, 30 ticks against me, right? Like, how is that happening? Okay, but like my MFE is only 7.5. So this kind of thing that I've kind of been feeling, it's very much true. It's like I get in and then it just doesn't go. Like even if I'm in the right, even if I get the direction right and the trade is working, I don't get paid for it. It doesn't go as far. And it seems that may be because of the spread. Right? Pros use volatility targeting instead, but it requires positioning sizing. Well, if you're like in a large enough trade that you have an impact on the market, right, then you're eating it either way, right? So what do we do about it? I don't know if there's anything I can do, because again, it seems that the increased volatility is kind of when it started killing me. So when I think back to the time periods when we were doing really well, it was like, okay, we think X is going to happen. I kind of see some evidence of a large meta order. I get in, I ride the swing, and then that's the end of it. And they're small things. But now we're getting into this market where, like, it seems like something as crazy is happening all the time. And when you get to those key points, the way that it ends up going is very, very often quite the opposite of what I expect. You know, like yesterday, I thought that news was mostly a positive thing in terms of like it was showing deflation. But the market didn't react that way. They still sold it. You know? It's like they knew that Waller was going to come. It was like, okay, guys, we need to do something about this. So we're going to send Waller out. We'll let you know that it's going to happen ahead of time so that you can all sell it. It really felt like that to me. Like the Federal Reserve was tired of it and kind of started talking to the... Like there was this whisper or something that was going to be a big event, because when you look back on it, it's like, yes, there was that economic news and everything, but the market didn't react that strongly to it. It kind of reacted opposite of what I thought it should be. And then it was tough trading the rest of that. So that kind of means to me that they actually were all waiting for Waller, right? It's like saying to a heroin addict, just say no. Well, like, here's the thing. So 400 is a lot for me. That's about the worst run of trading I can possibly have. But I can, it's still not even the whole, you know, I can still trade fine. Like this, so this is a key thing, guys, I tell you what, especially if you're new. I can come in and I can take $100 losing day, you know, like 10 times in a row before I would have to refund the account, right? So I think we are getting to the point where I'm going to have to put some more money in it this year, but I don't have to do it right now. I can kind of wait and see what's happening. You know? So the amounts of money that I'm playing with are small, and part of that is because, and you know, he said, why don't we size up? When I was doing well, it was because I knew that something like this could happen. Now, why I seem to be so misinformed on the market lately, though, is another question. Like, it's really... it seems like I've been on the wrong side of most of the major moves over the past few months, right? There was a couple where I just kind of missed them and I just kind of sat there and didn't take advantage of it. So, but you know what, like another thing is that like my stats before, it was like I would get 12 MFE and like 8 MAE or maybe 10 MAE. So like the difference is actually not that much, right? So it could be a tiny thing that I'm doing wrong. Roll 10 G's at the account and just dollar cost average. I don't know. So that loss yesterday is finally the one that was bothered me enough to say let's take a little bit of a break from live trades. Before I said, okay, we'll take a loss. It's okay. We got to learn to push through those and we just keep trading it, right? But I don't know if I just dollar cost average the daily range if I would make money doing that. I don't know. You know, this is the other thing, is that I really do want to do something different. I don't know if my main decisions are based on the news I would say that there's a good portion of them. Yeah, but with the way that I trade the sim, the fat tail still kills you. I don't know if that was, so let's come back and look at that, because I think that I've had a few foibles on that one as well. I gotta come back here. I shouldn't have closed it. I always like close the tab and then you guys will say something and I have to open it back up and crap like that. Okay, the 19th, and I want only ZN trades. Yeah, it's not terrible. Oh no, it is terrible. Because there's this day I took the loss on the 5th or whatever, the 3rd or 5th. So that one actually hasn't been profitable over the past few months. If I go further back, it is, but so you can kind of see, like, kind of part of the point of doing that was to show people how it fools you, right? You get all these little wins and everybody thinks you're doing great, and then a day like this will happen and you just get absolutely destroyed. Right. So I don't know. I think that when you get into a market like this, your ability to predict the orders based on it's just diminished overall. It seems like our ability to predict the flows just become diminished overall because there's too many random things happening. And I really wonder if at the end of the day it just comes down to the intraday time frame. Like, I find it interesting that it's like any kind of thing that I can test from a technical analysis perspective on an intraday basis just doesn't work. If I get 5 years of data, it just doesn't work. But if I go to daily charts and I include multiple instruments, then you can find an edge in momentum. And so, the whole thing we've said is like, well, technical analysis doesn't really work, or at the very least, like, chart patterns don't work very well. But then a part of me also wonders, but maybe it's that day trading just doesn't work. That day trading just doesn't work very well. And that in the long run, because I don't know if I've ever come across anybody. I've never had anybody show me 5 years of day trading where they were profitable every year. Never seen that. I was trading, I'm trading 10 year. 10, why? It's kind of depends on your data. Yeah, day trading is very hard. I don't think I've ever seen somebody show me 5 years of day trading results that were profitable every year for 5 years. Yeah, you're probably right, Jiwi, that if you're doing daily charts, 5 years might not be enough. You might need as much as 20 years of data. So 5 years, from what I've seen, is still enough for, like, the purposes of, I was going to show this back test to other investors and that sort of a thing. But in order to make sure that I'm not, like, overfitting and things like that, you need more data, I think. Yeah. Well, no, day trading is for brokers and market makers. The fee gatherers, literally the only reason it exists is as a retail concept. Well, I don't know. I think that how do I go about this? Okay, number one, the market would not function without day traders in there. Okay. Yes, it's mostly noise, but the market doesn't need that noise, right? So somebody has to do it. And I still feel that the market seems to be more and more disconnected from the informed traders. Like we need informed traders out there. And the market is becoming less efficient, not more efficient, and that's a problem, right? But why does day trading exist as a retail concept? I don't think that it's like, this is just created for brokers and market makers. I think instead what's happened is it's kind of vestigial, is what it actually is that there was a time where it kind of worked and you could make money from it. And what has happened is the structure of the market has changed in a way that is just so unfavorable for you that the only people really making money are brokers and HFT traders, right? That doesn't mean that you can't make money from day trading. It's just the odds are very much stacked against you, right? But I kind of suspect, well, not suspect. I don't have any way of proving this, but from what the stories that I hear and things like that, there was lots of people that came in and were floor traders, were locals, and made an okay living doing that. So I think if you were able to like really objectively measure like the amount of retail trading success in futures trading, that like going back to the 70s, that you would see as time goes on the number of successful traders decline, right? Yeah, the markets were different back then. Yeah, the market has changed, and so it's made it harder to be profitable trading. And people are still trying to do stuff that made sense 20 years ago but doesn't make sense now. Okay, now the werewolf analogy, that I think that's definitely true too. So what he's talking about, there's this game called Werewolf. You can actually go and buy this little game with cards and kind of some things that changed the rules. Called One Night Ultimate Werewolf, that is a little bit more interesting. Because in the original version of the game, the wolves basically always win. Basically what happens is a minority can basically always win against the majority if the minority is informed and the majority isn't, is the way that it works. So the way that it works is they pick like 3 werewolves, and then every round the werewolves decide to kill somebody, and then everybody wakes up and the villagers decide to kill somebody, and then you find out if they're a wolf or not. And the game keeps going until you've killed all of the werewolves or there's not enough villagers left. And what ends up happening is the wolves basically always win. So if we're coming in here to a market context, right, and I'm trying to make my decisions based purely off of what I'm seeing from changes in prices, but I'm not actually informed, the informed traders can basically, kind of game their market movements in a way to fool everybody. And it doesn't matter what people think. If the people think, oh, okay, that doing this means this and doing this means this, the informed traders just change what they're doing until they get the result that they want. And so the end result essentially is that you're going to lose unless you're the informed trader. And that is absolutely the main kind of point that I've been making here on this channel for years now, right? Is that if you are not the informed trader, you do not have an edge. And what's happening right now is I had a period where it seemed like I was pretty decently informed, and now all of a sudden it's like I don't know anything. And it's just like it just changes just like that. And how do you get out of that rut? Okay, but so that's all very interesting information. If you're a new person, I hope I scared somebody out of day trading. But where does that leave us? We don't have to day trade. We don't have to stream. I would love. I don't want to stop streaming. Yeah, one of the things that kind of irks me is well, so two thoughts. I'm being a little ADHD here. Please don't stop streaming. I think the idea of an informed trader is somewhat silly. Somewhat hundreds of thousands of contracts going back and forth. The only truly informed traders are the Wait, who are the LPs? I think that there are situations where you can be the informed trader. There are situations that the liquidity provider, but they're not informed though, right? The liquidity providers don't have to be informed to make money, generally speaking. You can be informed. Is just like, can you actually be informed? Be the informed trader consistently enough to justify doing it? That's the real problem, right? And I think that the real answer to that is probably not. Or at the very least, for one instrument, probably not. Right? They're informed in that they can change the market conditions. Well, yeah, but then just don't play that game, right? You've got to limit your trading to, I know something that's not priced in. And how often can you actually find something like that? It's not every day. It's maybe not even every month now, it seems. Aside from news releases, 30 seconds. Nah, because I think that when I was doing well, I don't think that it was really off of the news releases. It was off of more gentle news. But, it was still, there were situations where we were able to find an informational edge. It's kind of like, the problem is that the amount of like high impact, significant information out there is too high right now, right? So that's why I was kind of putting the caveat that like you might not be able to do it with one instrument. You might be able to come in and say, well, I watch 10 different markets and I only trade the one where I really have an informational edge. And if I have that many markets, then when one market has too much stuff going on, I don't have to trade that market, right? And hopefully having enough markets gives you enough opportunities more opportunities to find that edge. So that's a possibility. Yeah, well, the stuff before, no, I don't think that. I think that it worked well during that market regime, and it's not working well in this market regime, yeah. I mean, the principles behind it are still solid because we know it's backed by empirical evidence, right? But taking the empirical evidence and putting it into practice is a little bit more difficult, and I think another thing that I should put in there is that I don't even know if it's necessarily that like it can't be done or anything like that, but it seems like I have problems particular to me that might be making it, a lost cause, right? Like the whole I had 2 contracts on going into that thing, and like why was I even doing that, right? I shouldn't be doing that. Part of that is probably, like those are the sorts of mistakes that you'll make from ADHD. Because that's a very classic ADHD mistake. And I was already really bothered by it. And I don't think that I am like low, what do you say? Call it neuroticism. I don't think that I am low in neurotic traits. I think that my neurotic traits just tend to be suppressed by the medication, but once you push me far enough, it's still there. So, because yesterday, when I was getting into the evening, I did not feel good. Like, the stress is taking a toll on me. So I'm not sure if I can actually do it. Like, it's me. Right? Well, a lot of the bad things do come from ADHD. Yes. I mean, listen, not every bad thing that you do, like neuroticism is not an ADHD trait, right? That comes from me. That's why the retail trader is going to focus anywhere on timing and risk management. Okay. What else are you going to do from the risk management perspective? Besides, don't eat 50 ticks. Timing is hard, yeah. News Squawk is saying a bunch right here. Bowman and Barr are supposed to be speaking. Oh, and we got some numbers here in about 10 minutes, I see. What do you mean? How do you feel you would have let that trade run if it was live? Are you talking about the sim trade that I had in ZN? That one, I took out at break even, basically. Oh, no, it was not. I think you misunderstand. I had the trade on, and I was like, well, doesn't seem to be working for me. I guess I'm gonna scratch this. It was kind of like starting to go in my favor, so I was just trying to give it a little bit more room. And then I forgot that the speech or Fed's Waller coming up was there. Like, like I had said it like, a minute before, but it didn't dawn on me I needed to take it off and everything. So the trade that happened outside the stream, it was literally like I pressed the stop streaming button and then it happened. So all that you guys missed was me actually puking it. And it was the live trade where I lost $100. Does that make sense? Yeah. And then I did also have a sim trade that I had been managing almost the whole morning in ZN. And that one I just scratched, basically. I got out of that one at mostly break even. But I had a live trade on in ZN that I lost $100 on yesterday. Yes. That's what started this conversation. But I kind of feel like we've gotten a little off track. Okay. The one of the points that I was trying to make was, okay, for one thing, I do sort of feel that I have some personality traits, most of them as a result of my ADHD, but ones that the medication doesn't really solve either, that work against me. So it's kind of like maybe so the reason why that is, I think, important is like, what if you went and you traded for a firm? Well, I'm not actually sure if I'm actually well suited for that, like temperament wise. That's what I was getting at with that, right? But so then the thing is like, well, okay, like you can shift. We can just kind of talk more broadly about what's going on in the market, right? And do what we're doing anyways, and just kind of try and shift the focus to, like, we're not day trading. Yeah, I day trade, but only because that helps me be informed. But I don't have any illusion that like I'm gonna make money from it, right? That's all fine and well, but if that's the direction that I'm going to take, it kind of doesn't make sense to live stream it, 8 o'clock in the morning when most people are still driving into work, right? Yeah, I'm sure that they do. I don't actually know. Maybe the resources that would be there at a firm would help me enough to. I'm pretty good. I mean, I feel like I'm over it. I'm not depressed about it anymore. There was certainly times where a bad loss would just have me down for days and weeks. Now I get over it after about an hour. Like, well, it was $100. Doesn't really matter. Actually, the first thing that's been on my mind is like, I kind of want a new audio interface, and the music conference where they announce all of the cool new audio interfaces is in a week, and so I kind of wanted to get a new audio interface, and that would probably be like the last piece of equipment that we would need for the near foreseeable future. But now it's kind of like, oh, let's just kind of save it all and see what happens. That's 3 ticks in ZB, bro. What are you talking about? Oh, yeah, the amount that we lost. Yeah. Yeah, it's small amounts. But anyways, so I got the points that I wanted to get out there. Now let me try and circle back and try and address the conversation that we were just having. Okay. We know that there are a lot of things that work against you. Okay. I don't think that that means that it's impossible, and I don't think that that means that it's not worth trying. Right? It helps for us to understand where those challenges lie, because that may help us find solutions to it, right? But I'm don't like the way this conversation is going, because I'm kind of feeling like you're trying to say, it's pointless, it's never gonna work, just, give up, sort of a thing. Well, I don't want to give up. I am tired, though. And that's kind of where I'm trying to take this, is like, I want to change something, but, well, I don't know if you guys are saying that, but that's just kind of how I feel right now in this conversation. That's what I feel is you guys are trying to, like, I feel like Uzi is saying, yeah, you just don't do intraday trading at all. I mean, that's the financially responsible thing to do, is to just not do intraday trading at all, or acknowledge that you don't necessarily have an edge, it's just gambling, and I'm only allowed to lose $1,000 a year or something like that. Sure. But well, I could also say nobody's saying it, but that's maybe what some people or detractors might say, right? So I'm trying to address that. It's like, well, why watch him? Why even have the stream if he's trading terrible right now? But you're all telling me, oh, please don't stop the stream. I find this is very useful, etc., etc., etc. Are you all not day trading? So don't understand. You're all saying the things that you are, but then you're still day trading too, right? Unless Uzi is given up at some point, to which I, Brad asks no stop on the trade. I did not have an explicit stop set, but where I would have had the stop, it wouldn't have made a difference. I would have lost the same amount. So my theoretical plan on how I would manage a stop in the 10-year wouldn't have made a difference in that situation, so I might need to rethink that whole thing. The only reason why I'm saying that is that I think the point here is like, if we're going back and we're saying, okay, so something bad happened, how do we deal with that and try and avoid letting that happen in the future and learn from it, etc., etc. The way that we avoid that one is remember when there's a major event coming up and not hold a position into it, right? Uzi says, I haven't given up, but I do day trade, far less so. Yeah. Okay, so Octavius makes another good point, which was that I had a losing trade earlier in the day, and then I took a second one, and that one went way against me, came back in, and kind of what happened was, like, I doubled down on it once it started going profitable, which I shouldn't have done, but probably I should have just said, okay, I'm still not on, would just take the one and stop. That maybe would have been a thing. But I kind of do have like 30 trading partners to help keep me accountable here, right? So at any time you guys can be like, oh, I don't think you really should be taking another trade, right? You don't be afraid to say that. I might dismiss you, but you should still do it, right? Yeah, no, it's not just you were saying you're already feeling like this had no sense really, and you shared this with us. Oh, and I kind of don't understand what you're saying, but I expressed these thoughts before, right? That's why I tell you to add to it, yeah. Well, I shouldn't have added to that one. Okay, so let me back up. What I'm trying to say is that everything that we know about the market is still true, is still empirically backed. Okay. How you turn that into an edge, and can you actually turn that into an edge that can bring you success through day trading? I don't know. I think that it's a worthwhile endeavor. Just don't risk very much money on it. Okay. And that's always been the position. That's still true. But something has changed. What has changed? I'm tired. I'm getting tired. I think that if I don't take any trades and, for a few days, I probably feel recovered and it could just go right back into it. Can put a little bit more money on the account and I can start, I can still trade the account right now, but I would want to put more into it. And then, we could just continue on like nothing happens. But I really want to change something. And I'm not sure what I want to change. So let's start out with what you're saying, Octavius, though. You guys are there, can say stuff in chat and things like that. But one idea that interests me is getting you guys that have been in here forever and ever more involved. So like on Discord, we have like the whole stage thing. And so what I can do is I can go and I can start a stage and you guys can then get on and you would be able to actually talk, right? And then it wouldn't just be me anymore. So that's one idea. The other thing that we can do is I can try and either rebrand or start another channel that is much more focused on financial news. Because I kind of feel that maybe, because I have tried the tack of we're just going to talk, make content about what's going on in the market, right? And I didn't have too much success with that, although I think a lot of that was just TikTok. And I didn't really make like one-off videos for YouTube about that. I think that YouTube kind of has some issues with like current events anyways. So that's kind of some of the problems with that. Third idea, the third thing that we're already kind of going through into this has been working on creating a managed futures fund and developing a longer term sort of swing momentum style strategy. I think I would like to do that one either way. I don't know if that really would change too much about how we do things here on the stream from day to day. I also I'm kind of concerned about maybe I'm just too neurotic for this. So would like running a managed futures fund, that would just make things worse, right? Although I feel like that if it was really as truly well, I don't know. I just set the rules up and I do what the rules say, and if I'm really a more objective sort of a thing, maybe it wouldn't be as bad, but you're tired because you're thinking about money and making and losing and not. It's not because I'm not tired because I lost money. I'm tired because I feel like I've been off kilter like I have just been behind the curve every day for like 4 months. That's what frustrates me, for sure. And I just don't know what I can do to resolve the issues I've had with this market other than to wait it out. Although I guess that brings me back to the thing that I was saying earlier, that I kind of suspect that my trading hasn't been as bad as I think, and that it's really more that the spread is just working against me. So if I just work to deal with the spread, maybe that fixes that problem. Maybe. So based on this chart right here, so I think I was kind of misreading it yesterday, but oh wait, how do I have this? 2-year range is the gold line. Yeah. So for some reason, the volatility in the 2-year hasn't increased very much. That could be that actually it has, and the extremes are larger, but because there's not as many people trading in the 2-year, it doesn't actually reflect that in prices. Could be. But if this is all correct, I could just switch to only trading the 2-year and just having to deal with the stupid spread, right? I was just looking over here at kind of scanning the markets. I'm kind of noticing some strange buying in oil. Okay, can I ask a question about... Yeah, absolutely. You know, that does kind of remind me, though, like one of the things that I've got going for me that's really, really well is that I'm a good programmer, and it's very relevant, and I can make some really great stuff for NinjaTrader 8. And I have a really great set of indicators that I really don't see how anybody trades without these sorts of things. I'm not going to say that they're like the only source of that sort of stuff, but I think that they're better than free versions that you find out there, and it's all together, and I probably should do more to sell them than I do. I downloaded this cumulative delta indicator, but it doesn't display in its window. I don't know. Wait. Trying to remember that Shimaku told you that a long time ago. Oh, what? That I should just focus on the programming? Well, so let's be a little bit more specific, though, right? What would that entail? So what is it that I should be doing right now to like sell more NinjaTrader 8 indicators that I'm not doing? I'm sure that there's a billion things that I can do, but I kind of feel like I don't really know where I'd want to take that. You know? like making tons of content about them, I kind of feel like would be kind of stupid. Well, maybe not. I don't know. Maybe I'm being dumb about that. Write them for Sierra charts? Well, that is a good point. What? Okay, that's not what I expected you to say, Uzi. Uzi's just saying, who cares? Just program stuff and put it out there. Yeah, no, you're right. You're right. But I don't want to make. Okay. This is kind of interesting because I'll keep coming back to very often like that the money is not what necessarily matters, right? So I think that if I took the track that I've seen some people do in terms of like selling indicators and stuff, that I could probably turn it into a full-time job. I think that there are some people out there that I don't think that they make as much as I do being an SRE, but I bet you that they make close to 100, six figures just selling indicators. I mean, they make enough from selling indicators. There's a couple of people that make enough from selling indicators that they do have like a business, like they have multiple developers and people and stuff like that, right? Oh, no, that's not true. That's not true. You could easily code up NinjaTrader 8's DOM columns. For me to duplicate... Oh, NinjaTrader 8's DOM columns, I guess, yes. Sorry. I thought you said Jigsaw there. I was gonna say, for me to duplicate Jigsaw would probably take me a few years. Put a Lambo in the background. When I see an ad or an email from a company that makes indicators and I've got a bunch of those emails from them previously, I get the feeling that they are not traders. I very often, when I download and try an indicator from somebody, I feel like that. It's like, this person clearly doesn't trade. Because, like, they have an okay idea, but when you come down into the implementation details, it doesn't help you trade. I saw one that, so the most impressive thing that I saw recently was that one that kind of like enhanced the chart and made it more like trading views chart. And I was just like, these people just are clearly chart traders trading view, because the things that they're putting in here don't really help you from a practical execution side. Oh, I don't know if Jigsaw is a dying concept. I don't agree with that at all. It does take them a long time to update. But they had that last update that they put out was pretty good, I thought. The one that they put out at the beginning of this month. Yeah, well, but you're paying about that much to just execute for almost every platform, so Sierra charts is a little bit cheaper, but and they kind of hide the cost from you a little bit better, but you're still paying a monthly fee just for Sierra charts, right? You don't have an upfront cost. That's the difference with that one. Yeah. The last update from Jigsaw makes me feel more confident that maybe they've gotten through the growing pains. Because you got to understand that there was two things that happened with Jigsaw that kind of are why the development is so slow, right? The first thing was that Peter created a development team, because before that it was like Peter was writing it or he was contracting little parts out, right? But this time he went and I think that they even have an office, but you know, they're all doing it in the Philippines or whatever. So that's the first thing is like actually creating a team and getting a team that's effective. That takes a little bit of time, right? And then the other thing that happened was they made the charts. And so there's a bunch of like issues that you've got to do to make the charts good, like bugs that they had to fix in the charts that we don't use, so we don't really see them. But that's kind of, you know, so this last update kind of makes me think that they feel like that they've fixed most of the major problems with charts, and that they're ready to kind of address the platform as a whole again. And so I'm hoping that that means that we'll soon get things like spread charts and what would we call it? A market analyzer that NinjaTrader, you know, something where I can just see the price of a bunch of different markets. It's not that every serious Tom charges is well, sure. But you get what you paid for, right? I mean, okay, I got off track again. So the point that I was trying to make was the objective here is not let's make as much money and grift as many people as possible. I don't care to do that, right? If I'm going to do something, I do believe that I have some things in my NinjaTrader 8 indicators that will help retail traders. Is it enough to turn the tide against, you know, against a losing battle? Really? Probably not. But it gives you a chance. I feel that with the tools that most people start out with, especially that most NinjaTrader traders start out with, you're just not competitive. So making them for CR charts would be beneficial. That's something that people have been requesting for a long time that I can do if I'm like trying to shift some things I could do with CR charts. I honestly don't see how people trade without the DOM. I really don't. Like the chart trader thing, I just can't do it, man. Even just putting the trades in, I hate it. I understand that it doesn't make sense to pay $50 a month just for that, but I do think it provides value. If you're gonna day trade, I really think that you should have a DOM up. And I do think that you're getting your money's worth with Jigsaw. And I think that you're getting your money's worth if you're doing Sierra charts. And there are a couple of platforms out there that are free. Their DOMs are acceptable, but not quite up to my standard, at least. You're not going to see me switching off of it. I'm going to continue to pay the $50 a month for Jigsaw. You probably do make more money from the stock portfolio, though. I still say if you want to day trade, I would strongly recommend getting something like Jigsaw. So how much is you started? So now you're saying it's 500. Are you going to tell us how much? Oh, you keep contributing to it. Yeah. So that's another thing that I would like to do. Right now, everything that I do, I try and keep it like self-contained, right? Which is to say that like I only use money from like the business to go back into the business and all of that, right? So like I'm not taking money out in putting it into individual stocks. I did that with the government's money that they gave me, and that's where I got my stock portfolio. And it's actually a decent size now. But I would like to be making individual stock plays more often. I would like to do kind of like, let's say, speculative swing trade sort of plays on a regular basis. And when I say a regular basis, I mean like once or twice a month. Like let's put $500 once or twice a month into something, right? I would like to do that. I'm kind of still working on, clearing my balance sheet out and making it so that I can do that really, really comfortably. But so that might be something that we do later this year. I actually have a lot of things on here to look into. Some of these things I should probably just go and do. This one, I have the candlestick plus thing. I should just go and do that. Hell, I could just start doing it right now, frankly. But I'm not going to take a trade today. If you have an actual... Well, you missed the whole rest of the conversation, because the way the conversation has gone today is, I don't know if any retail trader really truly has an edge on an intraday basis. At one point, I was able to, but things change. Stocks make me the money, so I fund that instead. Well, so I wonder. I guess you don't really get like the 401k match, right? But are you like maxing out your IRA and your 401k? Is this portfolio that you're talking about an IRA, or is it like a Mad Money account outside of that? It's the IRA. Okay, so let's talk about this, because I think this is interesting. Oh, and I need to turn on this. Okay. So, the recommended approach, this should be, you guys should know this, but I'm going to go over it anyways. And if you don't know, don't feel bad. But I think that most of you guys know this. I just don't want you to feel like I'm like talking down to you or calling anybody stupid or anything like that. Okay. So when you get extra money, and how should you invest it? The first thing that you should do is your 401k match. So most employers will match your contributions to encourage you to invest in their 401k. So at the very least, you should be trying to max out your employer's match, because that's just like money you're throwing away. For Uzi, since he owns his own business, that one's not necessarily relevant. Okay, but it is a thing. And I think that the numbers changed. Hold on. Let me double check here. What is it in 2023? 2024. Yes, okay. You can contribute 23,000 into that per year. Okay. Now, so usually what happens is first you max out your match, and then you do the IRA. Okay. So the reason that you start going to the IRA after doing the match is that the IRA is more flexible. So for instance, you're allowed to take money out of your IRA for first-time home buyer. You're allowed to take money out of your IRA to pay for college or to pay for your children's college. You're allowed to take money out of your IRA for medical expenses and not incur a penalty. Okay. So the limit on that, I believe, is 7.5K. Okay. Now, another key question is, do you want to do an IRA or a Roth IRA? And what's the difference? Well, a Roth IRA is basically you get paid money on your paycheck, and then that's already taxed, and then you take the money after it's taxed and you put it into the Roth IRA. Okay. So when you pull the money out of the Roth IRA, you don't have to pay tax because it's pre-tax. It's post-tax. You've already paid the tax on it. But it can grow in the Roth IRA without having to be taxed at the end. Okay. The regular IRA is pre-tax, which basically means that you can deduct the amount that you invested into your IRA against your taxes. Okay. So what's the difference? Well, the general thing is if your tax rate will be more or less in the future. So if you think right now you're making, like $100,000, let's just say that we're all ballers, right? I don't know if 100K is really a baller in America anymore, but it's a good round number. If we're all making $100,000 now, and you're like in your peak earnings, when you're 65, how much are you going to be making? Are you still going to be working and making over more than you did then? Well, with inflation, maybe. With inflation, maybe. So then it makes sense to go into your Roth. But if you think not, if you think you're going to be retired and you're not going to have any income, your income is going to be basically zero, or it's going to be less than it is today, then it actually makes more sense to put it into a regular IRA. Okay? I think somebody, Paul said, why not a Roth IRA? That's the difference. It's not as huge of a deal as everybody makes it out to be, but like for the people that are like investment advisors, that's like the only like real decision key thing that they get to talk about it. So that's why they talk about it a lot. Okay. So once you've done that, what do you do? And this is where you get to do what we call your Mad Money account. Okay. And this is where you can invest into a couple of different things. Okay. You can do stocks. Okay. Something that a lot of, oh my gosh, why is it doing that? Let's start over up here. Oh, come on. There we go. Okay. So you're already maxing out your tax advantaged accounts, right? Okay. So now you can put money into stocks, real estate, and private equity. Are kind of like the three major your three major options. Which part are you doing in Bitcoin? Let's categorize Bitcoin under stocks, but so here's the thing. This one right here, private equity, has the greatest profit potential. Okay. This is the one that makes multimillionaires, is private equity. Okay. Like pretty much all of the people that are, are worth hundreds of millions of dollars or are very high net worth individuals, it almost all comes from private equity. Most often they're like a founder, or maybe you're lucky and you're an employee at a startup or something like that. But you can get into private equity if you have a large enough income. You basically have to be making like $250,000 a year. They are changing that right now. If you have a Series 65, then you're allowed more access to private equity. And they're going to be introducing a new test that can get you into that. I wouldn't be surprised if in the future, if this test thing catches on, if you start to see more and more companies go to the private equity markets to do fundraising instead of the stock market to do fundraising. Because a lot of people, especially smaller companies, are kind of getting fed up with the stock market, and it kind of pushes you in a bad way. So don't count out the private equity deal. But the problem with private equity is like finding the opportunities. You kind of usually have to know somebody that's in the know, sort of a thing, right? I'm not in the know. I kind of want to be. I don't know how I get into that world, but so that's the issue with private equity, right? Okay. Real estate. Okay. Real estate is where a lot of the micro millionaires today have come from. So real estate tends to make millionaires. Shouldn't you be short? I don't know. I'm trying to not trade it today, right? Why would you do this? It wouldn't make me happy having some money at 65. What? Okay, I don't understand that comment, but okay. Anyways, okay. Now there are some risks with real estate right now because like the valuations that you get and everything for real estate just kind of like don't make sense anymore. Like to buy a place and rent it out, it's like super expensive. So like it's way cheaper to rent than it is to own right now, and so that makes like having a bunch of real estate and renting it out to people not as attractive. And that might be the case for like a few decades, right? Like I think we may have just seen the end of like, because over the last 10 years, you've seen a lot of people that they got really, really rich off of real estate, right? But that might not happen in the future. Even the people that are like real estate agents, like that whole industry is changing. So the future prospects for real estate are a little bit questionable, right? Okay. And then there is, of course, stocks. Okay. So the problem with stocks is that it's a lot of work, right? Like managing a portfolio of 5 to 10 stocks, and you probably want to spend like 2 hours a week studying them and stuff like that. Like you really got to know the company and what's going on, and there's a lot to know. And even after all of that, you may not perform as well as the index. Okay. there's a fat tail where it's like most of you will kind of underperform the index a little bit, but then sometimes you get lucky and you make a ton. Okay. So that's stocks. Okay. So if we are to the point where we have the mad money, like it sounds like Uzi may be at, like maybe he's maxing out his IRA and he wants to put more money in, and so he can just put a little bit of money into stocks, then how do you go about it? Well, there are different ways that we can go about investing in stocks like that. And this is like, I've already pretty much secured my retirement, so now I want to make money that gives me the more freedom today is kind of like the thinking here with this, right? Okay. So there's a couple of different, so this is where we kind of get into like the different kinds of major strategies, and can you actually pull these off as a regular person? Okay. So the first is just indexing. All right. You just put it in the S&P 500. You probably make 5 to 7% per year, depending on inflation. And that seems to be a pretty okay deal. Okay. The next most common thing, and what it sounds like Uzi is doing, is what we're going to call long only. So you pick about 5 to 10 stocks, or as many as you can handle. And you only buy, and as you get more money, you buy more of them and average into them over time and buy and hold them for the long term. That doesn't mean that you hold them forever. Like if the company is going to crap, then of course get out. I'm not a huge fan of Boeing right now, although I kind of think that it would have to be neutral. I don't think that'd be going short off of it, but I think I'd kind of have to be neutral because I don't like them as a company, but there is a lot of demand for aircraft. So like, how's that going to go in the long run? Maybe Boeing works it out, whatever. But like, if a company is really going south and you really don't believe in the company anymore, then by all means get out. But for the most part, you want to stay in it as long as you can, right? This is long only. Okay. The next one that you can do as a retail trader is long short. Okay. So you go long some stocks that you really like, and you go short some other stocks that you don't really like. And if you're properly hedged, you know, the shorts and the longs can kind of cancel each other out. And you actually end up having, so the advantage to this is better Sharp, basically. Your risk-adjusted returns are better. So you can actually leverage this up, potentially. So that's what's great about this strategy. Okay. But what's bad about this strategy is that the short part of this has been getting just it's been so awful since the GameStop thing, right? So I don't know if I am really super enthusiastic about this one right now. Okay. Next one is, I'm going to say selling options. Not just trading uncorrelated pairs. So something that you might do is you might say, I really don't like Nike. So what you do is you sell Nike, but then you go and you buy Skechers, right? So a shoe company that you do like, right? And so what if you don't like Nike, but the overall market moves up? Then you're going to lose money on your Nike. But you have something that's like in the same industry that should also be going up to cancel it out, right? So yeah, you can have ones that you like and that you don't like that are in completely separate industries, and that helps as well. But you know, I think that sometimes it's better to have, you know, a pair, you know, one in the industry that you like and one in the industry that you don't like. Yeah, well, so in the United States, if you pull your money and it's not in those tax advantaged accounts, then you're going to have to pay, basically like what, 20% or what is it now? I have it over here. Up to 20%, up to 20%. It's not terrible. Okay. So the next one is selling options. So you could have some stocks that are long only. And then on top of that, when you believe that the market is going to continue moving up, you can sell the options and pocket the option premium. Okay. If you're covered, if you're selling the options and you're covered, then that kind of limits the fat tails. But this is kind of just like a little sweetener. So this one is like a lot of work for, I don't know if it's a whole lot of benefit, but there is that one. Okay. Oh, you know what? Are we getting news here? Because I haven't heard anything from my news squawk here in a little bit. Oh, we got NAHB housing market index in a minute. Okay. Okay. Next one that I really like is buying options. You buy far out of the money, puts in calls on individual things based on things that you think are going to happen that aren't correctly priced by the market. And when you make money from them, you can really make, like 10 times your money. So this one is like really fat-tailed. Far right tail is like the big advantage with that one. It's a lot of work though, because you've got to be constantly looking for opportunities and looking at the options and trying to find your spots and stuff like that, right? Okay, so that's buying options. And then the next one I'm going to put on this list. Okay, here's the NAHB 44 versus 39. Okay, so the next one is momentum. So momentum is I have a bunch of uncorrelated instruments, and I trade them based on a daily basis, based on moving averages and breakouts, so that when something gets going, it turns around and it gets going, and you make some part of it like this, right? And if you're doing that on one individual asset, it tends not to work very well. But we're trading a big portfolio of uncorrelated assets. So we might have multiple different positions on and things like that, okay? The issue with this strategy, as I understand it, is that there is kind of like a minimum barrier to entry, right? So, like, let's say that I have 20 different assets or something, and, I can only afford to have one contract on in any one of those particular things, right? Well, then what happens is I might come over to this market and one contract is like, $5,000, and then I come over here and one contract is $1,000. How do I size things appropriately? And there's all this stuff about how you determine how much money you put into each individual position, and that's where a lot of their edge comes from, is those kinds of like risk management sort of ways of dealing with it. Like I could come in and say, I look at the margin required for the contract and the volatility of the instrument, and use that to formulate, how many contracts I'm going to buy. But if I have a very small portfolio, then, I might not be able to size my positions appropriately. And so it's not until you're getting into managing a portfolio of a few $1 million that momentum like super makes sense. Okay. But I kind of think not that I've seen anybody do this, but I kind of think based on what I've seen that as a retail trader, you can kind of make this work. So I kind of want to try that. That's kind of the direction I've been going is momentum. Momentums have a far right tail as well. Yeah, and pretty good sharp. Good sharp. So there's some nice things about it if you can make it work. Somebody was saying, shouldn't you be short? Well, I'm trying to not trade it. It has gone quite a bit further. They are not quite to the key point, though. I really want to see if they get below 08 today, what could happen. Then we might start seeing momentum the other way. So, anyways, going back to what Uzi was talking about, you know, for your Mad Money accounts, there's a bunch of things that you can do. And now you've kind of got like your long only portfolio. You might be able to go in and try a second one of those. You know, like start doing options every once in a while, or start working on a momentum portfolio or something like that. Yeah. I wouldn't put day trading on that list though. Day trading is for fun, honestly. Because that's my approach to it right now. If you're going to day trade, there's different ways of approaching day trading too. Because you could day trade stocks. You might have more success doing that. And I don't know. Every once in a while, I think part of it is that, you know, we know something about futures trading and order flow and everything that other people don't. And maybe the market is not very advantageous to us right now, but sometimes things change. And there might be some regulation or some new instrument, or who knows. It's probably not going to be anything that I could possibly guess. But at some point, a short-term opportunity might come about that, because of what we know about intraday futures trading, we're able to take advantage of it. And we just kind of got to be vigilant and be prepared to be able to do it, right? By the way, so yesterday we went from like 4% to like 4.7, right? Yeah. So it's been about 30 or, oh no, it's been about 5 basis points. That move. But they might not get it to 08. So I kind of think the downside might be capped. So I'm not sure that I really still want to get involved here. Yeah, or day trading is trying to solve the world's hardest problem. Huh. Day trading is extremely fun, but there are better ways of making money. Well, yeah, and I think, you know, the thing that I think is really devious about it is that day trading is the most accessible to us, right? Like, you can come in and day trade $500. Fine. And you learn the most from day trading, but, you know, it's the least likely to bring you financial freedom, you know? So, and the things that kind of do bring you financial freedom tend to work better when you already have a lot of money. So there's some real problems there with that. Like, I understand it is the way that it is, but I do wonder if there are some ideas that people have that I haven't thought of, where we can try and even that out, where, you know, people that don't have as much can take small risks that can wield huge dividends, and that could be more common to kind of bring in the wealth inequality. Kind of like when you're playing Mario Kart and you're in last place, so you get the special power up that zaps everybody and turns them small and makes them move slowly, right? Okay, I think there's another one that I missed, and that is that you can be a hedger. That's the other one that we could put in here. It's hedging. buy the commodity, sell the future, or vice versa, and make money on the spread. And that's probably where the majority of people that do make money in futures are making it. I think that the CME, when they make new products and you look at the education that they put out and everything else like that, I think that they are trying to like push us as retail traders towards trading on those sorts of things, and that they think that by making them micros that's giving us more opportunities to do that. So I don't know how I would do that one, but that's a possibility out there that we could put on it. So the point of that was maybe you could try doing momentum if you want to do more than just stocks now. That's all I was saying. But I don't know. I don't think that we've really answered the key question here today, though, which is what do we want to do different? So I think that the programming up the indicators for CR charts is a good idea. I have to look into how I can do that without having to pay monthly for CR charts, right? But I want some more ideas about. Yeah, that was a strong uptick. A good point, Octavius. I tell you what, Octavius, you're really good at this. You notice things. You really know when they're significant. I feel that pullback was one of the most significant pullbacks we've had today. I don't know if that means that it's going to continue or go back down, but there is definitely something curious in the order flow there. Okay. So the Sierra charts thing is like a good idea, but I'm kind of looking more for like, what do you want to do differently on the stream? Like what we talk about, what we're focused on, what we're doing during the stream. Are there things that you would like to do that we're not doing right now? I've tried kind of doing an investigation into individual stocks a bit more. I guess I can go into that one more. But, or is it the case that you all just really love the stream the way that it is now and you don't want me to change a thing? And yeah, for Seth, probably I need to take a little bit of a break and try and equalize myself a little bit. And then I'm just going to come back and I'm just going to keep trying and doing things the way that we were doing them. Right? But if you have ideas, let me know. That's what I would like to talk about. So I'm just noticing that, like, when that news came out at the top of the hour, so we got NAHB housing market index higher than expected at 44 versus 39. And then business inventory is in line with expectations. But you saw a really hard shift in the dollar that is causing all of the markets to kind of reverse. I find very curious. I don't think that I'm drinking enough water. Drink the rest of that. I hope that this that helps me clear my throat here. Okay. So I have a list here of things to research that I hadn't done. I could, and I kind of want to clear them off of my little board here. Oh, you know what? I can get rid of this, and I can get rid of this. And I guess I can get rid of this and this. This is my work. Those are all my work stuff. Okay. So the one that is on here that I wanted to read up on was this Durbin-Watson thing. So that's what I'm going to look up here. The Durbin-Watson statistic is a test for autocorrelation in a regression model's output. The Durbin-Watson statistic ranges from 0 to 4, with a value of 2 indicating 0 autocorrelation. Values below 2 mean there's positive autocorrelation, and above 2 indicates negative autocorrelation. I like this. I like what I'm hearing so far. Okay. Autocorrelation, also known as serial correlation, can be a significant problem in analyzing historical data if one does not know to look out for it. For instance, since stock prices tend not to change too radically from one day to another, prices from one day to the next could potentially be highly correlated, even though there is little useful information in this observation. In order to avoid autocorrelation issues, the easiest solution in finance is to simply convert a series of historical prices into a series of percentage price changes from day to day. Autocorrelation can be useful for technical analysis, which is mostly concerned with the trends of and past relationships between security prices using charting techniques in lieu of companies' financial health or management. Technical analysts can use... Okay, so they're saying that you actually use it to kind of like help yourself avoid certain biases in your testing and so forth. But okay. Rule of thumb is that the DW test statistic values in the range of 1.5 to 2.5 are relatively normal. Values outside this range could, however, be a cause for concern. The Durbin-Watson statistic, while displayed by many regression analysis programs, is not applicable in certain situations. For instance, when lagged dependent variables are included in the explanatory variables, then it is inappropriate to use this test. The formula for the Durbin-Watson statistics is rather complex, but involves the residuals from an ordinary least squares regression on a set of data. Okay, so they're doing a regression analysis on it. And then they find the errors from the regression. Sum of errors squared. Next, the value of the error minus the previous error calculated and squared. So they do differences on all of them. And then finally, the Durbin-Watson statistic is the quotient of the squared values. No, stop giving me new things to look into, Jiwi. Okay, so the first thing that I'm noticing in here is that because it uses the squares, that kind of introduces a fat-tailed bias into the statistic that you get, which I don't like. Okay, let's look at these other ones. I really liked that first one because there was an Investopedia that basically explained how to make it. It basically explained how to make it in a way that I could program pretty easily, I think. But I don't like that it's squared. I would prefer to use I would prefer to use the absolute value of the change or something like that, right? It's also kind of suggesting that you don't necessarily just want to do it on price, right? That you might want to do it on the change in price as a percentage, for instance. Okay, British Godfrey. British Godfrey is a test for autocorrelation in the errors of a regression model. It makes use of the residuals from the model being considered in a regression analysis, and its test statistic is derived from these. The null hypothesis is that there is no serial correlation of any order up to p because the test is based on the idea of a Lagrange multiplier testing. Is sometimes referred to as an LM test for serial correlation. Okay. So they say, consider linear regression, where the errors might follow an autoregressive scheme. The simple regression model is first fitted by ordinary least squares to obtain a set of sample residuals. The coefficient of determination R² statistic is calculated. They create an arithmetic So I don't see how this one is different. I don't understand the difference between the two. It seems like the difference between the two is very small, at the very least. Yeah, he says those two are the same but different. Instead of testing randomness at each distinct lag, it tests overall randomness based on a number of lags and is therefore a Portman-Tall test. That is kind of interesting. I see. So they're probably not just testing like the difference between this and the previous one. They're testing like multiple lags going back. So I think we could program this. So I'm wondering now, something that I've never done is come into Ninja Script here. By the way, it's starting to get to points where we might It's getting awfully close there, man. Like, if they just keep going here. Usually when I get to the point where, like, I'm, like, fed up and I don't want to trade anymore, usually, like, really big, massive things start happening. But I don't think I want to just trade that. I think this one might be... It would probably too late for me to trade anyways. Anyways, isn't there a regression indicator? Yeah, there's the regression channel at least. Hold your horses, buddy. You're getting too complicated for me all at once. It can be used to test a hypothesis so that the elements of the sequence are mutually independent. Well, that's great. That sounds like a really useful test too. Okay. Anyways, how do they calculate the linear regression here? Fetch. Sum x equals double. Turn the period into a double. Period times the period minus 1 times 0.5. That doesn't make sense at all. So if our period is 10, then it's going to be 10 times 9 times 0.5. So it's going to be 45. Why? If it was 20 times 19 gonna get 190. Okay, I don't know what's with that, but okay. Then we got a sum and a sum, bar counts. Okay, then for each bar, so this count will be like starting from the beginning, so 0 times, you know, whatever the closing price is. And we're summing all of that, all of those together. And then we're also summing the actual value. We're actually summing all of the actual values together. And then, oh, what was the divisor? Is the sum x squared minus, oh geez, that's really freaking weird. Is that normal for doing a regression? I'm gonna have to look at how to just do a regression. I was kind of thinking that I could just do it for these ones, but well, I probably can, because it does look like, so it gets a slope and an intercept and all of this sort of stuff and creates a line. And then the middle is, yeah. So I think that I can come in and I can just say regression channel and use the middle, and then make all of my calculations off of that. Kind of thinking about what I want to do to make this so that I can switch it from using the close or the input if I need to. I kind of don't want to program this one live because this could be a good indicator to put into the indicator suite. Well, it'll just come out with a number though, right? Well, it'll be coming out with a number that'll change over time, I think so. You can graph it. Can we build a 24-hour online robot for the alerts in the Ninja script? What do you mean? Sure, you can create a Ninja script that does alerts. You might not even need to program for it. I think I get the middle here, and then I just calculate the difference between the period and each individual, the middle there, and then do the other calculations that they had there. That seems pretty straightforward. There seems to be some flaws in the regression though, right? The real world is more random than regression analyses. The thing is I remember going through all of Nassim Taleb's technical in Cerdo and talking about the flaws in these kinds of statistics, but didn't actually necessarily give us an alternative. Except for not using the mean squares. So Biden has given in and designated the Houthis as terrorists now. Cool. So, did you guys see this whole thing with Hassan yesterday? Interviewing a terrorist on his stream? Like, what? I'd recommend to go with Wald-Wolfowitz first instead of using regression. Run of a sequence of a maximal non-empty segment of sequence, blah, 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 blah. Yeah, that one seems very different. So I think what I'm going to say here is that we've got some pretty good things in here, but I don't know if they're things that I'm going to do anything with at the current moment. I could just create that indicator, but there'd be like a lot more work I'd want to do after that as to like, does it work? How effective is it at doing the X, Y, and Z or whatever? The treasuries are still kind of flicking around here. It is kind of making me think, hey, oh, why do I have do not disturb mode turned on? Let's get rid of that. They may get to that 08 level. The way that it's doing it and everything, it wouldn't surprise me to see us bust through 08 and then come back, but the market is starting to show some signs that my hypothesis about that being a key level is correct. And all I'm doing there is that is like the low from December. That's December's low, essentially. It's 08, 07 half, somewhere around there. So that's an area where I think, okay, so what are you, take a look at your, oh, so when you were talking earlier, were you talking about my cumulative delta? So what's wrong with, what's the problem that you were having with it? I have this weird version of cumulative delta that's slightly more computationally efficient. So like if I come to ZN and I just create like a 5-minute chart here, and then I add this one, cumulative delta 2. Okay, so if I just add it to the chart, it's just gonna be 0. Yeah, because I don't have tick replay turned on, right? But if I come back and turn on tick replay, da 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 da. Oh, well, okay, so yes, so ZB is rising, is buying. So why is that? Well, what is the spread doing today? Always the first question you got to ask, right? When you're looking at cumulative delta in treasuries, especially when you're looking at the 5-year or the 30-year, the 10-year, not so much, but the other ones. Okay, well, so our spread indicator is right here. I can see pretty consistently across the board that we are flattening. So what does flattening mean? Flattening means this way, which means sell the front month and buy the back month, right? Sell the 5, buy the 30, right? So if we're going to buy the 30, that's why you get that. So ZB is buying even though we're falling because of the spread. And pretty heavily as well. And it was doing that pretty heavily yesterday. So pretty powerful flow. Could take out those December lows. It could. Right now, they're kind of acting like they don't think it's going to happen, but could do it. It's been a strong enough of a move today that could happen. Though I should note that I think, like, since the news and everything, we've only moved from like 10 or 20 bucks. So even if I had traded at it, I don't think that I would have made more than 10 or 20 bucks, right? I think I do want to do the candlestick plus plus. I have a theory that my candlestick plus plus, if I rewrite it, so there is an existing candlestick plus plus. I don't have it in here. I have to find that on the old machine here. Let's see here. No, it should be over here. Yes, there we go. In custom. What, bar types? Is it? No. It's chart styles, isn't it? Yes. Candlestick style plus. So every time that he does the on render method, he is creating a stroke style, a dash style, all of like the anti-alias mode, all of these things. He's creating a bunch of brushes, right? So we can change all of that. Probably can also change this for loop. We can split it up into a couple of different things. So Sim22 has a lot of great stuff, but I don't think that he's a programmer by profession. So if we put all of these things that aren't really changing or that are used every iteration into things that are just created at the very beginning and end, like and do we have one? No, he doesn't even have one of those. Okay, so there's a new method that is like when you add it to the chart or whatever, but if we can initialize everything in there and get rid of all of the like creating and recreating the things, then we should be able to reduce the amount of time that this uses. And I think that the NinjaTrader chart style might even have the same problem. Where is it? Candle style. Right. They're creating brushes every iteration. Why are they doing that? Why don't you just create one object that you reuse over and over again? And just create it at the very beginning when you do like, where do I do this? Where do I do this? Yes, here. See, in my indicators, when on render target changed, I dispose of all of these things, right? I dispose of all of my existing objects, like my brushes, and then I recreate them with the new render target. That's what they need to be doing, instead of making it every freaking iteration. Right? Like every time that you're doing this right here, you're passing the render target into something, that's time that you're doing every iteration. So I think I can change this. And I can have like both. I'll have two charts. I'll have one with candlestick style plus and one with my candlestick style. Then you'll see the difference in usage with the utilization thing. I think that'd be cool. I think I can do that today. I don't know if I want to program that on stream. That seems like that'd be kind of boring, don't you think? You guys didn't really say anything else that you wanted to change. I think that means that what you really want is for me to just rant a little bit more. So here's another take. What do you think of this? We continue to trade we continue. Well, not. I mean, of course, I'm going to continue to trade, but like, I continue to be degenerate with it, but just on sim accounts. And then whether I win or I lose, like, I can make a really big deal out of it, right? And get really excited and try and maximize your entertainment value. That's the other thing that I can do is it's, you know, I don't want to do this whole thing about like, let's just try and make as much money from the stream as possible. I want to do things that help traders, but you know, I could make it more entertaining, right? I could work on, let's try and keep it as informational as possible and like it's still valuable, but like make it more entertaining while you're doing that at the same time. That could be a focus that I could go on. Stripper intern? Why would I need an intern for that? Octavius, you don't think I can? I couldn't pull that off, could I? No. So what we need is we just need a really good looking artificial intelligence to help run the stream with us. You know, I've been working towards that actually. I could probably be going a little bit faster on that whole thing. Especially now that you can make custom GPT. You know what? I haven't even been into the GPT store. Introducing the GPT store. What do we get? Explore GPTs. Search public GPTs. Canva. The most powerful math and science AI tutor. Create secondhand marketplace listing based on pictures. Sell me this pen. Hey, okay, I could try that one. Wait, so when I go into these, does it just let me use it? If I have ChatGPT Plus, it lets me use it. Okay. So I don't necessarily need to buy it. Okay. So if I search for finance, what comes up? Financial wizard. I predict future stock market prices as an AI analyst. What? SigTech. Used by top hedge funds to get cross-asset market data. Wow. So there are some GPTs about that. I'm thinking I could make like a custom GPT that's supposed to be a good-looking character, and I can make her super flirty so that she's constantly flirting with you guys. I don't know. I'm like going through the scenarios in my head of what a artificial intelligence, like a flirty artificial intelligence, might do with you guys, and I'm kind of second guessing if that's actually a good idea or not. that might be more trouble than it's worth. But I do need to get my Kubernetes cluster set up. I've got like some containers and stuff that all seems to be working fine. I need to get Kubernetes up and running. I stopped because I didn't know what I wanted to set my host name. AI girlfriend, they used to joke about it. Now it's becoming oh so true. It really is a thing. For sure. Like one of the top, we didn't see it when we pulled it up there, but everybody was talking that Succubus GPT was like the top one. So like, But I haven't tried it. Are the AI girlfriends really so great that you would rather talk to your AI girlfriend than a real girlfriend? I just don't see it. Creating an AI character and then opening an OnlyFans account for it. There's money. I mean, well, I question this as well. Like, there's all these people saying, "Oh, you can totally just make like AI content and become super." And like, there's these people like with YouTube channels where like all of the content is automated, or at the very least, it's not like a face, right? And doing like just perfectly fine with it. And but I kind of don't know, like, because I've never seen anybody post the results. Are there people actually becoming millionaires from doing that? I kind of suspect. So like with OnlyFans, oh, I tell you what, the amount of the Pareto principle definitely applies on OnlyFans. Like, there's a small handful of like a few 10,000 people that are maybe making a reasonable living with it, and then everybody else basically makes nothing. Now, probably a lot of those accounts are like they made it and they didn't really try, but I really wonder how many of these. So I see some girls on TikTok that seem like they have really big followings on TikTok, and they're like hustling really hard. That's the other thing, is like, it shows me all the time these accounts where like, my last account got banned and yada yada yada. Yeah, I hate TikTok. It makes me think about how much I hate TikTok, even though I watched way too much of it. But they're hustling, but like, they ain't living in nice places. Like, kind of looks to me like they're not actually making, like, even very, very successful ones with relatively large followings aren't actually making a ton from it. I think what you're going to see more and more of is that things are just going to get cheaper. And the first place where things are getting cheaper is content. You know, it used to be, have somebody write an article for you was worth a lot of money. It's not going to be worth nearly as much unless you really have the expertise and you're really special. You really have content that nobody else can create, because people can make generalized content that gets the job done for basically for free. Right? And once you start to get those kinds of improvements into things like building a house, like if we have automated robots that can build houses, oh my gosh. Can you imagine how different the world would be if the cost of a house was more like $50,000 instead of $700,000? No, the 3D concrete printers are stupid. This is okay. You triggered one of my pet peeves. All right, you can tell, like, most people don't get as animated about this sort of stuff as I do. Right? It's like a autistic ADHD thing. Okay, you triggered me. Okay, here's why those things suck. Living in a house with concrete walls sucks. Okay, can you imagine sitting in your home on your couch watching TV and not being able to get cell phone reception? Because that's what happens when you live in a concrete house. That's why people aren't buying them. Like, everybody looks at it and it's like, oh, that's so cool. Maybe I could buy a house like that someday. I'm telling you, nobody's buying them because you don't want to live in it. Nobody wants to live in that. You know, you're not going to get your wife. You imagine, like, the Wi-Fi not even being able to make it through even one wall, right? Yeah, no. The 3D printer way of doing it is nah. Maybe some of these things where, like, that you've got, like, pre-made interlocking bits and stuff, and the robots can interlock them and stuff, but I think that the issue is that the best materials that people want in their houses still have to be done by hand, essentially. Especially sheetrock, okay? Once you get to the point where robots can do sheetrock, you could get much cheaper houses. Imagine that world. Imagine that world. Houses in Croatia are made of reinforced concrete. Okay, well, maybe some. I'm telling you, nobody in the United States wants to live in a concrete house. They might not know it yet, but I guarantee you don't want to. It's not optimal. When I was in school at the University of Utah, the building that almost all of the computer science classes were in is essentially a bunker. Is basically the whole building is made out of concrete because there is a nuclear reactor in the bottom of it. And it was a huge problem. Such a huge problem that eventually Ed Catmull from Pixar, you know, he gave a huge grant to the university, and they used that to build like a whole new building and a graphics institute. But in addition to that graphics institute, they were able to move all of the computer science classes out of the concrete building so that people could actually use internet and stuff. It was a huge problem. They basically had to wire like a Wi-Fi extender into every room. But things will get cheaper. There's a lot of people think that you know, automation is going to put people out of jobs, and then it will all just be poor and the rich will be like super rich, right? No, that's not the way that it's going to work. Efficiency improvements have always traditionally come with increases in quality of life. So what will happen is your quality of life will get better over the next 100 years. Especially for people at the very bottom. You might get to a point where people at the very bottom might be more like a middle-class family today. Okay. There will still be rich people, and the rich people will be like unfathomably wealthy. That it'll be like right now, if you're rich, you can afford to have a space agency to shoot rockets up into space, right? Okay. In the future, rich people will have like their own space stations and stuff, right? Okay. But that doesn't mean that the quality of life won't be getting better for everybody else. And why will that be? Because everything will be so dirt cheap. Like, you realize that right now, one of the problems that we have is essentially that we are too efficient at creating food, right? Like, if we made all of the food that we could with the available farmland and so on and so forth, the prices would be so cheap you wouldn't be able to make money from it. So we like literally pay people not to make crops in order for the prices to be something that's like sustainable, right? Okay, but if you know, as things get more and more efficient, that means that things like food prices can kind of come down and you can just increase food supply. Because like everything else is cheaper. People's needs are cheaper. People's needs are cheaper than you don't, you know. It's kind of interesting because there are some things that you can do today, you know, where like you can make money from it, but not very much. Like day trading. Like if you get really good at day trading, maybe you could make $20,000 a year. That's not really very much worth it, is it? Right? But if like that's all you need to be comfortable because everything's so dirt cheap, then maybe more people do end up doing those things, right? Completely different word. People don't even realize. The food inflation in Europe is full speed. I know, it's really, I tell you what, it's really just astounding to me how stupid some of these people in power can be about these things. Like they're kind of finding out, right? Like, oh, we can just do all the stimulus. Oh, except for that, then you get inflation and voters hate me. Okay, well, you found that one out. The next one that you're going to find out is immigration. That, oh, actually, it's kind of not a very good idea to just let everybody in. That's not a positive thing for everybody that lives in my country, and they hate that one too. And then the one that's going to happen after that is, oh, maybe actually taking all of the farmers' land away was a bad idea. It's just wild that they're doing some of this shit, but some of these people that are in the power aren't actually as bright as they think they are. They think, because I'm at the top and I have all of the money, that must mean that I'm smarter and better than other people. But I found that actually it doesn't. Listen, you want to shut me up? Like if it really is a conspiracy, speculator Seth was giving away too much of our knowledge and information. And so we need to come in and manipulate the markets against him and just make him trade so awful that he just never wants to trade again and go away. You're going about it wrong. You want me to shut up? If you want me to go away, like make me massively successful. Like if my YouTube channel had like 100,000 subscribers and every stream had like 10,000 viewers and all of this sort of stuff, I would stop doing it because it would have too much. It would like screw my own trading up. It wouldn't be fun anymore. As long as I continue to struggle, it kind of gives me a reason to keep doing it. Isn't that ironic? Well, guys, with that, I think it's time for me to get going. Well, I don't know. We're going to have to continue our discussion tomorrow because I don't feel like I really came up with any super good ideas. But anyways, I'll see you guys tomorrow. In the meantime, stay excellent, team.